What is up guys, Farmer Taiki here, and in this video I want to discuss how I'll be yield farming in a potential bear market. If you like the content, please like and subscribe and leave a comment in the comment section below. None of this is financial advice, so let's get started. Now, I am not making an argument on whether we are or are not in a bear market. This is a farming channel, so as humble farmers, we have to prepare for all scenarios, right? We have to be prepared for a bull market, a sideways market, or a bear market in order to, best take care of our farms. Because I don't want to be the guy that's going to be hand holding these bags and go full Bojack, right? Because in a bear market, the only thing that's going to be in a bull market are the amounts of McDonald's applications. So to put this in farming terms, now let's say this is you, right? You're a Pepe farmer, you're a frog, and you're happy. You're farming, you have positive cash flow. Everyone is happy, and you're just like making cash every single day. But maybe circumstances change, right? One day it's sunny, if you watch the news, there's a potential storm coming, right? And this is like a once in a decade storm that could destroy your farm, that could destroy all of your crops. Now, one option is for you to not give a fuck and just keep farming and not really prepare for this potential storm, right? This is an analogy for a bear market. But no, as a farmer, I have to take care of my farm, right? My farm is a business. My portfolio is a business. So what am I going to do? I'm going to buy some damn crop insurance, right? I'm going to call up farmers and be like, you know what? We are farmers. Bum, ba-dum, bum, 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 bum. I just want some insurance in case the storm does hit my farm, right? Or I can just stock up on some supplies, right? Buy some rakes, buy some hoes, buy some shovels right here, and buy some seeds, because if there's a storm and the roads are flooded and the supply chain is messed up, then I want to just have those supplies ready in case Amazon can't come to my farm, right? So always, you have to think about all scenarios. For me personally, this drop was really, really harsh. I think this was one of the worst drops in Bitcoin's history in terms of price action, in a really short time period. So I have to at least entertain the possibility of a bear market. So, I'm gonna sell some alts, raise some cash, and you can call me paper-handed or whatever, but I'm just managing my farm. I'm just managing my business, because there's so much you can do with your stable coins. I don't really see I'm not gonna cry if I miss out on some potential gains. That being said, this is going to be the overview of this video. We talked about some psychology, right? And then talk about, if you are in a bear market, let's set some personal goals. Because if you have goals, we can work towards them. And then I'll be making an argument for why I think Polygon is still the best place to be at this point in time. And though other layer 2 scaling solutions or cheaper L1s may change this factor, but as of now, May 24th, I think Polygon is still the best place to be. Okay, so let's talk about setting some goals, because if we set some goals, we can farm towards them. And I think in terms of goals, I think there are three broad goals that anyone can strategize towards. First is if we're in a bear market, just farm and stack your favorite coins, right? Because if we're in a bear market, price is going to go down, down more than we can ever imagine. So if we can farm assets if we can just farm and dump assets and swap them for coins that you actually want, maybe that's something you want to do. Second, you can stack dollars, right? Because maybe in the first 6 months at the start of the bear market, things will always go down and down and down, and you don't really want to buy assets when they're downtrending. So maybe in the first 6 months you want to stack USD, and then in the 7th month maybe you want to start dollar cost average the bottom, right? No one knows where the bottom is, but that's something you can do. Or lastly, farming speculative positions. I'll go over this in more detail later in the video. So for me, let's talk about my goals, right? If we are in a bear market, what are the 5 coins that I want to stack? Well, first is Bitcoin, right? Bitcoin is, as we saw in the market, if Bitcoin, if the markets follow Bitcoin, Bitcoin is the god coin, and if Bitcoin, I guess the success of your altcoins depends on Bitcoin's success. Bitcoin's always the safest bet in the crypto markets. We all know this; it's going to 6 figures at some point. Next is ETH, right? Just the two top assets on the crypto ecosystem. Then Chainlink, AAVE, and you'll never guess the 5th, because if you follow my channel, I'm kind of a fundamental investor, so I have my personal reasons for why these are my top 4. But I'll give you a moment to guess what the 5th coin is. All right, if you guessed it, then I applaud you. It's Doge, right? Because as we saw in this bull market, Doge went insane, right? No one would have guessed that it would have gone this 75 cents. But I know that in a bear market, people will sell off their Doge, most likely, right? Unless Elon is just like jacking off to Doge every single month of the year. So, if Doge ever hits under a penny, I'm gonna just farm and accumulate Doge. And maybe in the year 2025, Doge goes to like $2 and I just make like a 200x or whatever, or 400x. So these are the 5 assets that I'll be concentrating on if we enter a bear market. Not saying we are in one now, but in the future, these are the top 5 assets that I will be accumulating, or maybe I'll stack some dollars as well. Okay, now that we have a plan, let's strategize on how we can get there, right? So like, where are we gonna farm? So, like I said, I think Polygon is the best place as of now. I know that there are other solutions coming up, like layer 2 scaling solutions like Arbitrum opening to mainnet on developers March 28th, right? So maybe a bunch of farms go on Arbitrum, and maybe I'm not loyal to Polygon, right? So if there's a bunch of farms on Arbitrum, I'll happily go there, migrate there. Or Optimism, right? Uniswap is going to go on there I think July. So if other farms go on there, I'll happily migrate my assets there. And there are other layer 1s like Phantom, Avalanche, Solana, Harmony One. And though I don't really see great opportunities right now, maybe that's going to change later, right? Never stay loyal to a particular ecosystem. I'm only going to right now I'm sticking to Polygon because that's the best place to go. So let's discuss on why I think Polygon is the best place to farm right now. The reason I'm so bullish Matic is purely because of AAVE. Now, AAVE is a bank, right? You can lend out assets, right, to other people, get paid to do so, and you can borrow assets paying an interest rate. But the cool thing about AAVE is that because of these liquidity mining incentives that Polygon launched with AAVE, this $40 million program, you get paid to use AAVE. And this is going to last until April 13th of 2022, meaning that in the next 11 months, you'll be paid to borrow and lend using AAVE. So in terms of my farming strategy, it's going to revolve around AAVE. So for example, if you deposit USDC, you get paid 1.7%. And on top of that, you get paid 3.4% paid in the Matic token. If you borrow USDC, you pay 3%, but you get rewarded 5% for using AAVE, right, on Polygon. So everything that I will do, all my farms are going to revolve around AAVE, right? AAVE is going to be my checkings account. It's going to be my bank. Okay. And if right now the tether rate is super high, but I think this is going to go down to 5% at some point. If you want to know why that is, I have a whole video on why these rates get so high sometimes, but they always end up going to roughly 3 to 8%. Okay, and I have an entire playlist for Matic and why I'm so bullish on this ecosystem. So if you're new to this channel, please check them out. I have lots of content around it. And the cool thing about AAVE is let's say there's another crazy farm on Binance Smart Chain, on Phantom, on Arbitrum, whatever, right? You're not really stuck on the Polygon ecosystem, right? Because you can borrow stablecoins, right? Get paid to do so, and then you can just bridge it. I don't really know how long this takes, right? I heard it can take up to a week, so maybe you should plan ahead. But I'm assuming that over time, better bridges will be built, right? So maybe in the future you can bridge from Matic to Phantom, Matic to Avalanche, Matic to Optimism, right? So once those bridges get built out, you can borrow on AAVE, get paid to do so, and then bridge that asset to a different chain and farm with it too. So you're not purely restricted to AAVE. And also, in terms of other liquidity mining programs, Polygon has one with Curve. Now, this liquidity mining program is only for roughly $5 million, so I think it's going to run out quicker than AAVE, right? AAVE lasts until April of next year. Curve, I didn't really see a date here, but it might run out as well, because I think because people are getting more bearish, right? People are running the stable coins, these yields are kind of going down. This used to be 9%, now it's 6%, and this used to be 40%, now it's 22%. So in a bear market, these stablecoin yields, right, will go down just because everyone wants to farm with stablecoins because that's the safe option. I mean, this is still crazy, right? This is 5.7 plus 22.4. That's roughly 28% in yield, which you can't really get at a bank. So what you can do is maybe put collateral here, borrow stable coins and put it into Curve and just sit comfy, right, as you work your full-time job or whatever. Also, another thing you can do is LP on Sushi. I'll make a more detailed video on how providing liquidity works, but Sushiswap and Polygon has a $30 million program, liquidity mining. So you'll be essentially paid to LP on Sushi. And I guess the safest LP is the stablecoin pools, right? Like USDC DAI. which you'll still get paid 26%, which is pretty good. And the cool thing here is that you'll get paid in the native assets, which is like the stable coins, and you also get paid in the Sushi token and the Matic token. So if you want to accumulate Sushi because you like sushi, maybe in a bear market you can just farm Sushi and Matic, just LPing with stablecoin pools. Or if you're gonna, obviously, like in a bear market, these stablecoin yields will go down, and the more riskier LPs like ETH, USDT, these will go up, or like the Bitcoin ETH pools. But like that's just like how the market works, right? When everyone goes risk off, the stablecoin yields go down, and when everyone goes risk off, then like the more risky pools, their yields go up. Okay, and the reason I'm like, so AAVE has a $40 million program, Curve has a $5 million program, Sushi has a $30 million program. That's like $75 million, right? But Polygon started this DeFi for all fund for 150 mil. So in the future, I'm sure that more projects will onboard Polygon, and you'll be like paid to use that entire application. So follow them on Twitter and see like if there's any updates. Obviously, I'll make videos if there's like a really good one that pops up. And like I mentioned in my last video, where yield farmer Taiki was on, I don't think that these Degen yield farms like Monopoly Finance will do that well in a bear market, because these like Degen farms only perform well in a bull market when everyone is trying to go risk on and just like degenning, right? Because in a bear market, people lose money, people are pissed, they don't want to deal with like these Ponzi's, right? So if we enter a bear market, I will be focusing less on these. That's just like the cold hard fact. And let's go back on like this AAVE, right? Because you might be wondering like, hey, like in my list of like 5 assets, like Matic is not one of them, right? And in all of these like yield opportunities, like yield strategies, like we're earning Matic. So like, what does that even mean? Okay, so the thing about like these yield farming, or just yield farming in general, is like you don't have to keep like whatever token you're earning, right? Like Matic is obviously a good token to farm because it generally goes up. But let's say I have 20 like Matic, right? Like I don't have to keep it, right? I can claim this, right? And just go on QuickSwap or Sushi and just swap it for an asset that I actually want, right? It doesn't really matter what the asset is as long as the yields are relatively consistent. So that's like what I always talk about, like farming and dumping. With Matic, you don't have to farm and dump if you like the token, but generally with most farms, I will be farming and dumping. I do want to talk about a particular farm that I'm not farming and dumping, and this is like what I talked about initially with, I guess, like building speculative positions. Because farming is not all about farming and dumping. You can still farm assets that you're bullish on. So this is a particularly interesting example. It's a protocol called Mai Finance, like it's called QI, QI, and this is essentially a MakerDAO fork on Matic. And like me personally, like I don't want to market buy this token just because like it can go to zero. Like if this thing goes to zero, like I would not be surprised, right? Like let's be real. But like okay, Matic is a stable coin, right? It's a stable coin backed by Matic, and I just like put my stable coins on here and I'm farming this to build out a position in it, because right now I think this is like a $5 million protocol, and I think there's like a 1% chance this becomes a $1 billion protocol, like a 3% chance it becomes $500 million, 5% chance for it to be like a $100 million protocol. Obviously I'm pulling these numbers out of my ass, but the point is that you can still farm these tokens that you're bullish on, and just to build a speculative position. I've been farming this for roughly like 10 days, and I've already accumulated 210 plus 447. I don't know if you can see it here, but I have 447 in my wallet as well. So my plan is like until a better farm opportunity comes, I'll just be farming this. And if this goes up, great. If this goes to zero, then like I didn't really risk anything. The only thing I missed out on is like the opportunity cost of my capital. So I'll make a more in-depth video for QDAO if there's demand for it, but yeah, I'm just building a speculative position on an asset that I'm potentially bullish on, that I don't want to use my own money to buy, right? I don't want to, because this thing used to be like $2.50, and now it's at 37 cents. This thing was like below 30 before when like the entire market dumped. So obviously like these things can go down 90%, like it can go to zero, but if you can farm it for free and you're relatively bullish on it, then why not, right? And I want to wrap this video up and say that like I think a lot of YouTubers, they like leave in a bear market, right? Because they're not making money, they're not like doing so well. But for me, I'm a humble farmer, and farmers, there's so much you can do farming in DeFi in a bear market or in a bull market, right? So I just want to say, like, I'm not gonna leave whether we're in a bear or not. I'm a humble farmer. I'll keep farming whether the market conditions are good or bad, because a famous saying by Benjamin Cohen: bull markets make you money, bear markets make you rich. And I'll definitely be staying in a bear market and farming my favorite assets. And have a plan, right? Like, I suggest everyone just follow a plan. Like, what are like the 5 assets you want to accumulate, right? Or maybe if you don't know the 5 assets, maybe just stack dollars, right? And just buy the dip whenever it happens. But always understand that, farming, well, with anything, like your portfolio, think of it as a business, right? Your farm is a business. You want to protect us. You want to protect your farm by maybe raising some cash when the markets look bad, like what I'm going to be doing, right? Like, there's a storm coming, right? Just buy some insurance and just like load up on stablecoins. There's nothing wrong with that. You don't have to like diamond hand something to 0 or 1 billion. Like, you can just manage your portfolio. The goal in crypto is to survive, because we all know crypto is here to stay. Like, I don't know what's gonna happen to the prices a month from now, or 6 months from now, but I know that in 10 years, like, this crypto is gonna be like the backbone of all of finance. So that being said, this is a pretty long video, but please like and comment and subscribe if this was helpful to you. And thank you guys for watching. Have a nice day and have fun farming.